Good evening. This is Ken Long at Tortoise Capital with the review of the weekend trading report for June 9th, 2018. Market has shifted into bullish quiet conditions and is overbought on both an annual and a 10-day basis using the NDX. In the market mosaic, price with respect to the 200-day moving average is yellow bullish at 5.13. So it's 3% above sideways. The slope of the 50 has improved to green bullish at 0.6. ADX is still an untrending or weekly trending 13.7. When that crosses back above 15, that will be significant. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the boundary between risk on and risk off. We are at 1.027, so we are still in risk on conditions. Take that score, look at the last 5,000 trading days, compute the risk z-score, and plot that on this 90-day histogram. This is a number of standard deviations above or below the long-term average of the current volatility. You can see we're coming out of a very quiet time, and what we're finding support above the zero line. If this finds support and goes up, then we will have a very favorable posture for the long side swings, because we would have had a low, a higher low, and a third or second higher low, if you will, and it would have stayed positive. So this is potentially a very good sign for the long side. Remains to be seen what the negotiations with North Korea and the G7, how that shakes out. These are the holdings for the month of June for the blended month rebalancing, and the winners on the basis of Friday's closing prices. Theoretical exposure in ETF2 is at 70%. Here's a quick look at some blended monthly rebalancing performances. The U.S. is still dominating in the top 7 slots. Only emerging markets in Latin America on cash signals, Latin America and Brazil are just getting crushed. It's been such an excellent trade for us in the chat room. I wish you were taking advantage of it. If you're not, that is. ETF 32, again, U.S. dominating with energy and discretionary and small caps. Again, the entire Latin America, Brazil, Mexico complex suffering. Dow 30. Some real strength here in, let's see, Nike. Boeing looks very interesting to me, as does Home Depot, and that they both put in pretty good weeks. 3M has made an interesting move here lately to climb out of its hole, and deserves our attention. We were trading that, you will recall, some weeks ago around 198, and it's getting traction. In the sector spiders, everything's above its 4-month moving average with the exception of utilities and consumer staples. Retail looks interesting, as does oil and gas exploration. Could this be a turnaround in home builders? Worth a play. That's an interesting potential long-term economic good, and maybe a value play. That's nice in consumer staples as well. So if staples and home builders can both get some traction, we might be able to get some pretty good entry prices on that for swing and position trading. ETF Max, these are the top 30 or 40 or so from the 500 ETF database on the basis of the blended score. And I like the ones that are green and white, and even green and yellow is very interesting to me too. Market health check. The vertical blue lines are 10, 20, 30, 40, and 50 days worth of look back. These purple lines across the top are price targets to the upside based on previous maximum excursions. The red lines are support levels that have held in the past. These two regions in yellow that I highlighted this one because it was composed of the space between the high of the dragon and the belly of the dragon, the hump and the belly of the dragon, while it was in this choppy mode, and I was treating that entire area as a support region. I think it was favorable when the dots came out of the support area, and it's actually held here pretty well and continued. So I've now marked up even the narrower range between the hump and the belly of the dragon here. Still well above the zero line in MACD histogram, and is crossed back to the upside. This is still favorable. You can see the reduction in volatility in the width of the MACD river and in the narrow pinching of the Bollinger Bands among price. And again, this was if we go to this area here, we see that pinch, and if we take that across, you can see that it's essentially a Z3 pinch breakout to the upside. But this is a pretty quiet breakout. It's not much of a break, but it's clearly happening. ETF2 regional report. 7 of the symbols are on buy signals. That's what keeps us at 70-30. The S&P at 55 is better than the globals at 51. Inside the U.S., it's small caps, tech, mids, large caps. Weakest are Latin America at 15 and emerging markets at 41. You see all the small caps, all the U.S. doing well. Oil and commodities doing well. Everything Latin America just getting smashed. ETF 30, the top 30, based on blended monthly. So retail should be of interest to us. That also showed up on the BMR angle as well. And then all these green and whites, metals and mining coming back. The Russell, discretionary, another form of Russell. All of these interesting. I'm going to shift back to the daily report. We've seen that one already. The daily tactical, nothing on the auto framer, and that's because we're overbought, so there's not going to be easily discovered 2-to-1s there. So looking for momentum plays, so I would look for continuations in things like Travelers, Disney, Procter, Coke, and Home Depot, and all of these that broke out to new highs based on the NDX. ETF 30, there's a handful that test out well in the auto framer. A couple frog quality numbers in excess of 3. Not many patterns to choose from. 551W and a 5.1 in the auto framer for treasuries. Pinch and stretch. Only silver is on a Z3 super pinch right now. Brazil just getting crushed. Standard layout in the auto framer and the regression line fractals. Again, you see the just how far below their long-term fair value Latin America, Brazil, gold are. And then these are the big value plays: Walmart, 3M, Travelers, Caterpillar, Johnson & Johnson. Bottom shelf, these are the ones that are have been relative strength leaders and are well above their RL270 long-term fair value, and based on the number of ATRs. The daily squeezes, these are ones where the average range is large compared to the range that they had on Friday. So if we get a breakout from Friday's range, then there's a possibility of a range stat move, and that's what this reward to risk ratio actually measures. So some good names on there of companies we know and love: Monsanto, Lowe's, General Dynamics. 30-day regression line. and the slope of that 30 has now has crossed its 10-period moving average and is almost 1 standard deviation above the long-term average and well above the 0 line, so that's favorable. You can see the longer-term time frame here, and even the stretch relative to the 200, you can see that is slowly getting healthy. It's still wobbly, but it's trying to make some progress. Slope of the 30 and the 10 are now out of the river. The 90 has curled up and come back to the 0 line, and so this is generally a strengthening market. And that's everything I want to cover. We have a long session scheduled tonight for the Q&A for the swing course, some key concepts as a new set of students comes on board with their very interesting questions, and so we're going to get ready for that next. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry.